Hey everyone, it's currently 1 a.m. for me. I'm pretty tired, but I wanted to share with you a stock that I'm absolutely in love with. And I don't know about you guys, but it's been really hot outside recently. And whether the earth is really getting warmer or colder, because I've seen evidence about that, global warming or climate change, they reworded it to that because there's some evidence saying the earth is getting colder. Well, basically, ticker symbol FIX right here, Comfort Systems, is kind of here to benefit. So they service and repair over 12,000 buildings, HVAC systems, and some mechanical work. That's only like 25% of the revenue. But this is your main HVAC play. And HVAC stands for heating, ventilation, air conditioning. And I don't know about you, you cannot work in a building that doesn't have AC right now. It is so hot outside recently. And I wanted to give you a little analysis about this company. We'll also look at the investor presentation because there are some extremely really cool things about this company. I love how diversified that they are. But anyway, check this out right here. The valuation is pretty fair. I mean, it's not exactly cheap, but it's not super expensive either. You get a 3% earnings yield, and that's actually going to go higher in the future because look at the PE right now versus the forward PE. So the forward PE is a 27, and for a company that has incredible growth, as I'll show you very soon, free cash flow yield of 2.65%. They also have been raising their dividends for over 12 years. And in a second here, I want to show you the individual sectors that have seen some massive growth. Like the main growth for them has actually been the technology sector, which is data centers and Bitcoin mining rigs, which is actually a really interesting sector that's been giving them a lot of growth. But check this out right here. That's 37% of the revenue, at least year to date for 2025. Look at this. They're in healthcare, they're in education. So, like schools, 5% comes from the government. And we can see 39% of this is new construction. So, new buildings needing new HVAC and electrical work and stuff like that, existing construction. And then they have the service and maintenance, which I like this. This is all reoccurring revenue. And look at this right here. This is this maintenance. The backlog is nuts right here. It's actually like 40% of the market cap is a backlog right now, 6.9 billion. And look how it just goes up every quarter. I mean, this is really impressive. So the backlog for their maintenance base is also at a record right now. So that's really good news. But I wanted to show you something real quick. And this is so impressive. We look at the debt to trailing 12 months EBITDA. It's literally a 0.07. So pretty much call it this company has no debt at all and no borrowings, increased their dividends for 13 consecutive years, positive free cash flow for 26 years. That's great news. And here's how they allocate their capital. And this is what I love about this stock. So on average, since 2007 to 2024, whenever they receive net income and free cash flow, how do they reinvest it into the company? Well, 75% of that is through acquisitions. They buy new companies, which is inorganic growth, but growth nonetheless. It still makes the market cap go up. And I love that most of this is through acquisitions. And then, 11% they've returned through dividends. So they just increased their dividend literally, if I show you, like year over year, yeah, they just increased their dividend 46% year over year. So they've been increasing their dividends like crazy, and they're doing share buybacks. So 14% they return to you through buying back their own stock. And if you look at the total common shares outstanding, it just goes down and down every year. And yeah, it shows you this year by year. 2025 year to date, shares repurchased 91 million. I mean, look at that. That's like so many previous years combined. And we can also see dividends, 14 million right here. This is year to date, and they're comparing to the full year, so that's why it looks a little lower. But the share buybacks aren't, and also capital return 105,000. So that's great news. So, and here's how they kind of close out the presentation here: 19,000 plus employees of the most qualified HVAC and electrical contracting personnel in America. 7 billion plus in yearly revenue in 178 locations in 48 states. So that's really impressive. So here is how the individual segments of the business is growing. So obviously their main like repair service business, the mechanical segment. This is from 1 year ago, 1.185. Now it's 1.4, which is an 18% increase. So mechanical service is growing double digits. And I love that they have this electrical segment right here. It also grew a nice double digit, 21% year over year. They actually install like all the electrical work for you whenever you're getting an HVAC or anything like that. They also do plumbing as well. But check this out, the healthcare revenue, like from healthcare customers. Look at this. This is the growth rate right here under it. So that grew 36% year over year to a new record. Education, which is like schools and stuff, up 20% year over year. And this was kind of interesting to me. Office buildings. And then it also kind of made sense to me. I mean, if you're going to work in an office building, you kind of need an HVAC in there. You need AC in there. So office buildings up 20% year over year. While that's not a huge segment of revenue, look, that's 122 million. Not much. Retail, restaurants, and entertainment, that's down 4%. Multifamily and residential. So yeah, we could kind of see this just from the home builders. Residential housing has not been too good right now. And check this out. This is the main winner here, technology, because this is 677 million of revenue. That grew 45% from the previous years. And this is like your data centers, the Bitcoin mining rigs and stuff like that. Instead of doing water cooling, they literally just install the cooling pipes like right into the server racks, which is pretty cool. And manufacturing, that's down 1% year over year. New construction, hey, that's up 18%. Nice growth there. And then service projects. So that's up 14% year over year. Cool. So here I am in my buy and hold portfolio. This is my Moomoo account where once I buy a stock in here, I try not to sell it like ever. I just hold stocks on for the long run. And my main holding in here and my largest position out of every stock that I own is literally FIX right here, Comfort Systems. I mean, I was loading the boat on this company during this April dip right here. I didn't exactly time the bottom, The bottom was 313 and my average cost is 366. Still, I'm up 46% on this company. So it's kind of tough to buy them at all-time highs. I will admit that. But I love the dividend growth right here. They're kind of unique. You don't see really many companies do this anymore. They're raising their dividend every quarter. Like, look, it was 45 cents the most recent quarter, then 40, then 35, then 30. So they're raising their dividend like crazy, and they still have a really low payout ratio, only an 8% payout ratio. The dividend yield's actually a little bit higher than that right now. We can also see what ETFs own, ticker symbol FIX. And check this out. I didn't even know this was an ETF, ticker symbol HVAC. So, I guess this is an ETF investing in the HVAC industry. And check that out. Yeah, Comfort Systems is 5.57% of the portfolio. Then they got Amphenol Group too. Hey, that's another stock that I own in this portfolio right here. What other ETFs own this? Oh, this one's on my watch list right here. Ticker symbol XMHQ. Mid cap quality ETF. So if we go to the top holdings, yeah, look at that. Comfort Systems, 3% of the portfolio. Carlisle is 5%. Hey, Sprouts Farmers Market, this really is like a mid cap quality ETF, if I do say so. But check this out as well. The analysts are actually really bullish on this stock as well. Yeah, if we go to the analyst rating right here, we can literally see the individual analyst name and everything. So Brian Brophy on July 11th put in a buy rating at 581. It's like 540 today. Brent said this is a $630 stock. That was on June 30th. So the lower we go, the later back these buy orders were issued. But look, I noticed there's no sell orders. There's no analyst saying this is a sell. Where do they work? UBS, AI Firm. What is that? KeyBank. Anyway, so the analysts are really bullish on this one. That doesn't mean it's obviously a buy, but I believe this is a stock you probably want to add to your watch list right now. I'd especially buy this one under $500, but it might not go to $500 again for a while, or it might not do this. So probably around 520 might be a good buy the dip opportunity in this company. And Comfort Systems has really led the portfolio's year-to-date gains because we bought this stock after 2024. So we've bought our whole position in 2025. And if we go to year to date real quick, let's see, we're up 25% on a return money weighted average basis. And the S&P is only up 6.82%. So, if you're going to be an individual stock picker, you want to make sure you're picking very high quality companies. And for me, I literally made Comfort Systems my largest holding because the fundamentals are so impressive. No debt, 28 forward PE, huge backlog, huge diversification. I love the industry, HVAC. It's a kind of a low moat business, but their moat is really through their like regional, like they own some certain areas, like, there's no real competition there, so it's kinda like their, regional expansion and the companies they acquire. Remember how they were how they allocated money to shareholders? 75% was through acquiring new companies, 11% buybacks, 12% in, dividends and stuff, so I believe this one is the kinda company that's just gonna be a winner in the long run and a stock you just wanna buy and hold forever. Again, I probably just put it on your watch list right now. I don't know if I'd buy this one exactly right here when it's pretty much at all-time highs. But let me know what you thought on this analysis on comfort systems. I really appreciate if you drop a like on the video for me. Again, I'm not an expert. I'm literally a college student, so this isn't financial advice. Nothing in this video is. But yeah, if you want to get this app I'm on, it's also in the link in the description. I'd really appreciate that. You deposit $100. We'll both get some free stocks right here. This is Moomoo. If you look in the middle of my screen, I keep my idle cash in here. Gets the nice free yield. It's a free app. I think it's a little bit better than Robinhood. So anyway, if you want to check it out up here, and I hope you have a great rest of your day.